Right now, there's a thin piece of plastic sitting in your wallet. It weighs almost nothing. It costs you nothing to hold. But the moment you hand it to a cashier, something strange happens inside your brain. You spend more, you spend faster, and you barely notice you're doing it. Most people think credit card companies make their money from interest. That's the story you've been told. Late fees, high APRs, people who can't pay their balance. But the real answer is far stranger. The truth is, credit card companies want you to pay on time. They want you to never miss a payment. Some of their most profitable customers never pay a single cent of interest in their entire lives. So if it's not interest, what is it? And why does swiping a card make you spend almost 30% more than handing over cash? To understand this, you have to go back to 1999 to a small experiment run by two researchers at MIT. Drazen Prelek and Duncan Semester wanted to know something simple. Does the way you pay for something change how much you're willing to pay? So they ran a mock auction for basketball tickets. Half the group could only bid using cash. The other half could only bid using credit cards. The credit card group bid on average about twice as much as the cash group. Same tickets, same seats, same game. Double the price just because of what was in their hand. This became known as the credit card premium, and it revealed something uncomfortable about the human brain. Paying isn't just a transaction, it's an emotional event. And different payment methods create different amounts of emotional friction. Cash hurts. You watch it leave your hand, you count it, you feel it get lighter. Economists call this the pain of paying, a term coined by researcher George Loewenstein. It's a real measurable discomfort, almost like a small loss registering in your brain each time money changes hands. A credit card removes that pain almost entirely. There's no physical transfer, no visible reduction, just a tap, a beep, a green check mark. Your brain registers the purchase, but it doesn't register the loss, not in the moment, not the way it does with cash. This is not an accident of design, it's the entire business model. Here's what most people don't realize. Every time you swipe your card, the merchant pays a fee. It's usually between 1 and 3% of the purchase. That fee gets split between the card network, like Visa or MasterCard, and the bank that issued your card. This is called an interchange fee. Multiply that by billions of transactions a day, across trillions of dollars in spending, and you start to see the real machine. Credit card companies don't primarily profit from you failing to pay. They profit from you spending. Every purchase, big or small, quietly generates revenue, whether you pay your bill in full or not, which means the entire system is built around one goal: make spending feel as painless as possible, make it fast, make it invisible, make it feel like it isn't really happening, and they didn't stop at plastic. Behavioral economist Dan Ariely has spent decades studying how people make decisions about money, and one of his central findings is this: the less something feels like money, the easier it is to spend. Tap to pay, stored card numbers in an app. One-click checkout online. Every innovation in payment technology over the last 20 years has moved in the same direction, toward less friction, less pain, less awareness. Think about the last time you ordered something online with a saved card. You didn't type 16 digits. You didn't see a total and pause. You clicked once. The purchase felt less like spending and more like agreeing. This is why rewards programs exist too. Cashback, points, airline miles. On the surface, they look like the company giving money back to you. In reality, they're a tool to increase how much you spend and how often you reach for that particular card instead of another one. Research on reward-based spending consistently shows the same pattern. People spend more when they believe they're earning something back, even when the reward is worth far less than the extra money they spent to get it. So here's the uncomfortable question. If none of this is really about you falling behind on payments, why does the industry still profit so heavily from people who do? Because the system is built with two profit engines running at once. One engine runs on interchange fees, powered by painless frequent spending. The other runs on interest and fees, powered by the portion of people who do carry a balance. The two aren't in conflict. They're complementary. A card that makes spending feel effortless will always produce some percentage of users who spend beyond what they can pay back that month. That percentage isn't a flaw in the system, it's a predictable output of it. None of this means credit cards are evil, or that using one makes you careless. Cards exist because they're genuinely useful. They offer fraud protection, they build credit history, they let you make large purchases you couldn't otherwise afford in the moment. The tool itself is neutral, but understanding the psychology behind it changes how you use it. Once you know that a card is engineered to lower the pain of paying, you can reintroduce that pain on purpose. Some people track every purchase in an app the moment they make it, recreating the same mental accounting your brain does with cash. Some people set a rule to say the price out loud before buying anything online. Some switch back to a debit card for daily spending and save the credit card only for planned, larger purchases where the rewards genuinely outweigh the behavioral risk. The goal isn't to fear the card, it's to notice the moment where your brain stops registering the cost. Because that moment, the one where a purchase stops feeling like money leaving your life, is not a glitch, it's the product. Every tap, every click, every stored card number was refined, tested, and optimized to produce exactly that feeling. Researchers found it in a basketball ticket auction more than 2 decades ago. Companies have spent every year since building on it. So the next time you reach for that thin piece of plastic in your wallet, pause for half a second. Feel for the absence of the pain that should be there. That gap, the one between what you're spending and what you feel, is not something you imagined. It was designed.